Welcome to Maze Dive, the Sunday edition of the Money Maze, where we grab one JSE stock making headlines and tear it apart like a Nando's quarter. Messy, but properly satisfying once you get into it. I'm your host Jay, and today we're doing something that goes against every instinct in mining. We're spending the next few minutes on a gold miner that has, no scandal, no strike, no impairment landmine, no trading statement that opens with the corporate version of "please take a seat." And I need you to stick with me on this because there's one number Harmony paid out this year that's going to make you wonder why nobody talks about the boring oaks. Hold that thought, we'll get there. Now, every friend group has that one oak who actually pitches up. You say Bri at 2, he's there at 2, meat ready and the cooler bag. He knows exactly the score of the game before you do, and everyone else is on WhatsApp at 3:30 going, yeah, ETA 10 minutes. Harmony Gold is that oak. For the year ended 30 June 2026, they met their full year gold production guidance for the 11th year running. 11. That's longer than load shedding has been part of our national personality. They delivered between 1.4 and 1.5 million ounces. Underground grades sitting around 5.8 grams per ton. Costs inside guidance, and here's the bit that makes every CFO quietly emotional. Capex actually came in under plan. In mining, coming in under budget is about as common as home affairs closing early. It basically doesn't happen. Harmony did it without raising its voice. Now, the number I promised you. Over the past 12 months, Harmony returned 4.4 billion to shareholders in dividends. Say it slowly with me, 4.4 billion rand, handed straight back to people who own the shares. That's not a rounding error, and it's not a thank you voucher. If you were holding this on easy equities, the reliable oak just quietly Ubered you home and paid for the meat on the way. So how does a company get this generous? Well, let's rewind to March, when Harmony flagged that interim earnings for the 6 months to December 2025 were going to look, in technical terms, chunky. Earnings per share guided up 21 to 30%. Headline earnings per share up 11 to 17%. Two different numbers, and the gap between them is the whole story. So give me 30 seconds, because this is the bit that separates people who read headlines from people who actually understand what they own. The main engine was the Rand gold price, up 36% year on year. Gold's been on a proper run, and Harmony, being a gold miner, caught the entire wave. On top of that, they had an impairment reversal at Tshepong North. That's the accounting version of finding 200 Rand in your jeans you were about to throw out. You wrote the thing off as worthless, turns out it's worth something again, and the profit line gets a happy little bump. Add a currency gain on US dollar facility and EPS shoots up. But HEPS grew slower, and that's the number you actually trust. Remember our HEPS episode? HEPS strips out the one-off fireworks like the impairment reversal, and says basically, show me the real business underneath. And here's why it matters. Any company can have one lucky year. The question is whether the engine is genuinely running, or whether they just found cash in their jeans. Even with the fireworks stripped out, Harmony's real number is still double digits. That's the reliable oak again. Not lucky, just good. Now if you're sitting there thinking Harmony is a one-trick gold pony, here's the plot twist. They've quietly been building a second leg, copper. They completed the acquisition of Eva Copper, which puts copper production on the books straight away. Their CSA copper mine in Australia is tracking towards the top end of guidance, worth 17,500 to 18,500 tons, with costs and grades beating expectations. And further down the line, the Eva Copper project in Queensland is under construction. Although, and this is the most 2026 sentence I'll say this whole episode, land clearing got paused because they found a protected species on site. You can survive a cyanide shortage and a mill motor failure, but one small endangered creature can still bring all your bulldozers to a dead stop. Nature 1, mining nil. So why copper at all? Well, here's the bull case. The whole world is electrifying everything. EVs, data centers, solar farms, and all of this runs on copper. Demand is set to outpace supply for years. Turning a gold miner into a copper and gold miner is a bet on that shift. The same logic behind the Anglo-Tech merger we covered a few weeks back. Harmony's vision is just smaller and slower. Don't put all your boerewors on the side of the grid. But let me argue the other side because, hey, that's what I do. Eva Copper won't produce a single ton until construction finishes, and construction just got held up by a lizard. Long game bets are still bets, and the future doesn't pay this year's dividend. So enjoy the copper story, just understand it's a promise, not a payslip. Which brings us to the balance sheet. This is where the reliable oak really shows off. Harmony's net cash has been building, liquidity is healthy, and they're funding the entire copper push out of their own pocket instead of loading up on debt. For a mining house, that's massive. It's the difference between a company that can shrug off a bad quarter and one that ends up sitting across the desk from its bankers, hat in hand, asking very nicely for a little bit more time. So what's the catch? Because no Maze Dive episode is complete without me poking a few holes. So here's the 3 things to keep a half an eye on. 1. This whole surge leans on strong rand gold price. Gold does not stay this generous forever. When it softens, and at some point it will, the growth story softens with it, fast. 2. Deep level South African gold mining is never fully drama free. This year had a mill motor failure and a cyanide shortage. Both temporary, both survived, guidance still met. But a quiet year can turn loud without much warning. 3. The copper pivot costs time and money. And as we said, Eva isn't producing yet. The reliable oak is making a bet on the future, and even reliable oaks can get it wrong. So what do you actually do with all of this information I just gave you? Well, if you're a dividend hunter, Harmony just put 4.4 billion where its mouth is in a single year. If commodity stocks usually make you nervous because they feel like a coin toss, this is about as close to boring, dependable execution as gold mining gets. 11 straight years of hitting guidance is not luck. Luck doesn't show up 11 times in a row. It's not a hype stock. It's not going to hand you an ASP isotope style 400% moonshoot. But if you want gold exposure run by a team that does what it says with a bit of copper upside simmering in the background, maybe Harmony might deserve a proper look. It's the oak who pitches up. In investing, that's worth a lot more than what it sounds. So getting to your Stokvel starter pack for the JSE Jedi Harmony Gold Edition. Guidance met for the 11th straight year, between 1.4 and 1.5 million ounces. 4.4 billion handed back to shareholders over the past 12 months. Interim EPS up 21 to 30%, HEPS up 11 to 17%, driven by a 36% jump in the rand gold price, plus an impairment reversal. Diversifying into copper through Mac Copper, the CSA mine, and the Eva Copper project. Strong balance sheet, growth funded internally, not on the never. The catch is the usual one. Gold prices don't stay this friendly forever. Full year results land on the 27th of August. That's when we get the real detail on FY27 plans. You'll pop it in your diary, right next to that DSTV renewal you keep meaning to cancel. And now for the important disclaimer stuff. While my jokes may be worth less than Tshepong North before the impaired reversal, remember, none of this is financial advice. Please do your own research and speak to a licensed advisor. Catch you next Sunday, same time, same maze.